The year is 2026. The markets are a whirlwind of AI breakthroughs, shifting global economies, and unpredictable interest rates. Everyone's chasing the next big thing, the next stock that'll rocket to the moon. But what if the key to building real, lasting wealth isn't found in the frantic noise of Wall Street, but in the quiet wisdom of an ancient Roman philosopher? Let's talk about Seneca, a Stoic who lived nearly 2,000 years ago, and how his timeless advice is more relevant than ever for navigating the financial landscape of today and tomorrow. Wall Street is obsessed with predicting the future. Analysts churn out endless reports, algorithms run billions of simulations, and yet, the market remains as unpredictable as ever. We see bull runs turn into bear markets overnight. We see surefire investments crumble. The stress is immense. This constant chase, this fear of missing out, it's exhausting. But Seneca offers a different path. He taught that true power comes not from controlling external events, which is impossible, but from controlling our internal response to them. This is the foundation of a financial strategy that doesn't just survive market storms, but thrives in them. So, how do we apply this ancient wisdom to our modern portfolios? First, let's look at the current landscape. We all know AI and technology are the dominant forces, reshaping entire industries. It's tempting to put all your chips on the latest tech darling, but Seneca would caution against this. He'd remind us of the importance of diversification. The global economy is in flux, and what looks invincible today might be vulnerable tomorrow. By spreading our investments across different asset classes, sectors, and even geographical regions, we build a financial fortress. It's not about finding the one magic stock. It's about creating a structure that can withstand any single point of failure. This is classic Stoic thinking. Prepare for a world you do on control by building resilience in what you do. Another major factor on everyone's mind is interest rates. The consensus seems to be a slow, gradual decline. This has massive implications for bonds, real estate, and the overall cost of borrowing. A typical investor might react by trying to time the market perfectly, selling bonds at just the right moment, or leveraging up on property. But a Stoic investor takes a different approach. They accept that the exact path of interest rates is unknowable. Instead of trying to predict the Fed's every move, they focus on their own financial plan. Is their portfolio structured to perform reasonably well in a variety of interest rate scenarios? Is their debt manageable? They focus on their strategy, not on guessing games. This shift from prediction to preparation is a game changer for your peace of mind and your long-term returns. This brings us to the most powerful and perhaps most difficult lesson from Seneca. Managing our emotions. Market volatility is a feature, not a bug. There will be downturns. There will be corrections. There will be moments of pure panic, when it feels like the entire system is collapsing. In these moments, our primal instincts scream at us to sell everything. We see our portfolio value drop, and fear takes over. Seneca would call this giving in to passion over reason. He wrote extensively about the importance of maintaining an inner calm, a state of apatheia, not as apathy, but as a state free from irrational emotional disturbance. How do we achieve this? One of Seneca's most famous techniques is something called negative visualization, or premeditatio malorum, the premeditation of evils. This sounds grim, but it's an incredibly powerful tool for building financial resilience. Instead of just hoping for the best, you regularly take a moment to imagine the worst. What if the market crashes by 30%? What if your largest holding goes to zero? What if you lose your job? Walk through it in your mind. What would you do? How would you react? By mentally rehearsing these scenarios, you rob them of their power to shock and panic you when they happen. You've already faced them. You have a plan. When a real market downturn occurs, instead of reacting with fear, you can respond with the calm execution of your predetermined strategy. This is the difference between an amateur investor and a pro. This focus on what we can control is the core of Stoicism. You can't control what the stock market does tomorrow. You can't control inflation rates or geopolitical events. Obsessing over these things is a recipe for anxiety and poor decision-making. So, what can you control? You can control your savings rate. You can control your investment strategy and your asset allocation. You can control how much risk you take on. You can control your own behavior. You can control your commitment to continuous learning. By pouring your energy into these controllables, you stop being a passive victim of the market and become an active architect of your financial future. The outcome is never guaranteed, but a sound process dramatically increases your odds of success. Seneca would urge us to fall in love with the process, not the results. The daily habits of saving, investing, and learning are where the real victory lies. Furthermore, Seneca had a lot to say about the nature of wealth itself. In a world of social media influencers flaunting luxury lifestyles, it's easy to get caught in the trap of greed, the endless pursuit of more. Seneca believed that true wealth is not about having a lot, but about wanting little. It's about contentment. This doesn't mean you shouldn't be ambitious. It means defining what enough means for you. What level of wealth will provide you with security, freedom, and the ability to live a good life? Once you have a clear target, it becomes easier to resist the siren song of speculative excess and reckless risk-taking. You're no longer chasing a number on a screen. You're building towards a life you've thoughtfully designed. This mindset helps you avoid the bubbles and manias that wipe out so many fortunes. You invest to live, you don't live to invest. Finally, let's talk about adaptation. The market of 2026 is not the market of 2020, and the market of 2030 will be different still. Seneca lived in a time of immense change in the Roman Empire. He understood that rigidity leads to ruin. A Stoic investor is a lifelong learner. They are constantly reading, studying, and adapting their understanding of the world. They're not dogmatic about any single strategy. They are open to new ideas, whether it's understanding the impact of new AI technologies or the shifting dynamics of global trade. But their adaptation is always guided by their core principles: diversification, risk management, emotional control, and a focus on the long term. They adapt their tactics, but never their philosophy. So as we look towards 2026 and beyond, let's remember the lessons of Seneca. Build a diversified portfolio that can weather any storm. Prepare for setbacks using negative visualization to steel your nerves. Focus intensely on what you can control: your strategy, your savings, your emotions, and let go of what you can't. Define what enough means to you and cultivate contentment to avoid the pitfalls of greed. And never stop learning and adapting. The financial world will always be a place of chaos and uncertainty. But by arming yourself with the timeless wisdom of Stoicism, you can navigate it with confidence, tranquility, and a profound sense of power. You won't just be building wealth, you'll be building a richer life. Thanks for watching. If you found this perspective helpful, consider subscribing Stoic Gain, official, for more insights on building a resilient financial future. We'd love to have you join our community. See you in the next video.